What's up, everyone? Joe here again. I wanted to go through this morning's trades across the three U.S. indices, the Dow, NASDAQ, SP 500, looking at them through the lens of the ICT YouTube mentorship model. As always, since that's the model I am studying and trying to put into practice and trying to train myself to catch. And actually, it presented itself with a few buying opportunities this morning across the three indices. So I wanted to just quickly make a video to go over that. Again, I'm making the videos on this channel mostly for my own reference, to go back and look through and kind of re-listen to my analysis and what I was thinking on those days, but also to hopefully provide examples, or just, to help out anyone else that might be trying to learn ICT's fair value gap concept as well. So I hope these videos are helpful, and always I welcome feedback or anything in the comments. So with that said, let's go ahead and get into it. So we're going to start out on the 5-minute chart. This is, I have all three indices and the dollar index up right now. So upper left is the Dow, upper right is the NASDAQ, lower left is the SP 500, and lower right is the dollar. So what I want to call your attention to first thing is, let me zoom out a bit here. So we had seen overnight, we left the Asian high, London came up at 3, didn't break that high, so we had some relative equal highs here right at the New York midnight open. So as ICT says, that's too clean. Price is going to come back to those levels. So I started kind of looking with a buy, like a long bias, and I saw this fair value gap down here. So we see, forgive all this is yesterday's stuff I haven't cleared out yet. But price came down, took out a swing low here, and then rallied off in the afternoon session to end yesterday's trading. So, and it left behind a fair value gap that really never got revisited. It did wick into it here around 320 yesterday. But so it really left that whole gap open. So I was kind of eyeing that as a potential spot. And you see S&P, same formation here. NASDAQ, same formation. They took the sell side liquidity, ran it out for the rest of the day, leaving behind the fair value gap. All of them had relative equal highs around the Asian session. So I had a framework for today's price action that I was kind of looking for. Now I will say, admittedly, before I get too far in the video, these are paper markup trades only. I did not actually execute on any of these. I had actually really was sitting down to do my analysis right at about 9:25, just from running morning errands and stuff. So I really didn't even see this fair value gap from yesterday until like 9:29, and by the time I had it marked up and had marked up, this buy, price had dipped into it and took off, and I had already missed it. So from that point, I just kind of told myself, I'm only going to mark this up and kind of read the tape and mark it up as I see setups form that follow my bias for the day. So with that said, so I was bullish for the day. I was looking for price to come in here and to run out these relative equal highs on all three indices. So I'm going to drop down into the 1-minute time frame because that's where I like to be. So this bigger zone here on all three is that 5-minute gap that we saw. So what I did is I saw price was coming down in here, 8 o'clock, 8:30. It took out the sell side liquidity that had built up and then went above a swing high and left behind a 1-minute fair value gap. So that's what I was basing entry on. So you see I put my entry basically right at that upper wick right here, of that 1-minute fair value gap. And as you see, US 30 came down, dropped into it, briefly wicked below the 830 opening price, and then took off. So I basically saw this move happen real time, and I was like, I'm not gonna chase it. I'll just sit and watch and see if my bias panned out. S&P 500, you see here's the 5-minute fair value gap. 1 minute dropped down, took out the sell side liquidity here, came up, took up the buy side, left behind this fair value gap, and you see it just kind of played around in it for a while and then kind of moved away from it, and then right at 9:30, boom, stabbed down into it. I'm trying to get in the habit of actually adjusting my entries and stop losses to account for spread and differences in broker price feeds and everything. So you'll see like the high price of this candle here is 39.2125, but my entry was 39.2225. So essentially what I do is I add an extra, whole point to my entry price if it's a buy, and then lower the stop by a whole point, and then whatever my profit objective is, I move that down a whole point. So essentially I'm trying to not be perfect, but account for slippage, differences in broker feeds, everything like that. So if I had put it right on the futures candle high, it would not have triggered, but by adjusting it like I do, it would have triggered, at least on this feed. Again, I didn't put these on my broker, so I'm not sure if they would have in fact triggered on my broker, even if I did catch them. But so as you can see, 9:30, price dipped right back down into that fair value gap and took off. NASDAQ, the same setup. This is the 5-minute fair value gap. Did the same thing, took sell side, took buy side, played around in it, and took off. But unlike the other two, it didn't quite get down there. And even adjusting my entry and stop like I try to do, still would have missed it. But I mean, as you can see, it ran to those relative equal highs. So looking back, there was an opportunity for re-entry or for an additional entry as well. So you see US 30 came up, kind of stalled out, went below this swing low here, took out this swing high, left behind a fair value gap. Price traded through it, but respected this low. So I took that as another scale in buy and put it at the same take profit objective. So you see that was worth, another almost 4 to 1. Whatever you risk would be almost worth 4 times as much profit. Got kind of close to the stop loss, but didn't take us out. And then this initial buy that hit full take profit was a 6.5 to 1. So pretty much 10% or 10 to 1 between those two trades. S&P 500 did the same thing, dropped down below swing low, went up above a swing high, left behind a fair value gap, pushed down through it, except it kept going. So would have taken a loss there. So I kept watching it, and it kind of did the same thing here, dropped below a swing low. This might be fudging it a little bit. Let me increase this so you can see it. So it dropped below a swing low here. Right here, this candle drop below, then the rule is it should take out a swing high and then come back into a fair value gap. So I was waiting for it to take this swing high out, which it doesn't do until here. So, but then I started looking at price more, and it technically made a swing high right here and another swing low. So it went down, boom, boom, and then kept going, taking out this little swing high it made. Came up, left behind this fair value gap, traded back down into it shortly after 10. Right here, the entry would have triggered, respected this swing low, and then took off towards those relative equal highs. So SP 500, we had a 4.69 to 1 this morning, took a 1R loss, and then another 5.3 for the scale in position. And again, that might be kind of twisting the ICT entry rules a little bit. I'm not sure if he would have considered this a swing high or not. ICT, if you're watching, I'd love I'd love a comment on what you would think for that. Hopefully some days these videos do actually reach your view. And then for NASDAQ, just to complete it, so like I said, this entry had missed essentially by, let's see, 107.04. As you see, this candle was 107.03, so I added 1 to it, and this candle was 107.08. So it missed it by a solid 4 points. But then, so I was looking for an opportunity to get in and jump on the NASDAQ train. So, as I can, it took sell side here, took buy side just like SP500. I put that in, it slammed through it. So I was watching on the NASDAQ for the same kind of thing S&P did. And so we took sell side, did the same little thing here, and, swing high, swing low, kept going. But difference is there's no fair value gap in this leg up anywhere. Nothing there. And my TradingView subscription, I don't have the one that lets me go down into the seconds. So maybe there, obviously it came back down in respect. So it followed the same pattern as SP500, but on my 1 minute chart, I could not see any type of entry, at least according to the fair value gap, which is what I'm trying to stick to. So, but yeah, as you can see, came down and ran away towards those relative equal highs, just like SP500 did, and just like the Dow did. So all in all, would have been 18.3 R to 1, with a couple, considering those two losses. Had the NASDAQ actually hit, that would have bumped it up to almost 24 R today. So, again, you're risking 1%, 18% if you were able to hold and not take any partials. I probably would have taken some partials as we got closer, to up in here. Maybe would have taken some off here, taken some off here. I usually probably would have taken some off at like 3 to 1 a reward, just to make sure I'm paying myself. But I am happy to see that although I missed these trades and kind of told myself I'm not going to try to jump on with real funds or anything, I am happy to see that my bias played out and it did run to the target. And as you can see, it ran through it and it's now retracing back down. But I don't think I'm going to try to force anything else for the morning. Got a bit of work I need to do and stuff like that. We do have FOMC minutes at 2 p.m. today, so I will be keeping an eye on stuff for the afternoon session. And if there's anything that I find and mark up, I might make a second video and upload that later, kind of covering the afternoon session. But as far as the indices trading for the morning, that's all I got. Again, this is using the ICT fair value gap model he's teaching on his YouTube channel this year. It's completely free. I highly suggest, if you're struggling to find consistency or anything, or if you're new to trading and you came across these videos or anything, go to his channel, just submit to what he's telling you, and just study your butt off, and it'll be worth it. So yeah, so that's all I got. As always, in the comments, I'd love to hear feedback, questions, connect with you, other traders. If you're on the ICT mentorship as well, what setups you saw this morning, if you were looking at either of these 3 markets today, or if you just have any comments about the videos or anything, I would love to hear it. And until I talk to you next, stay safe and happy trading. Thanks.